Today is January 21st, the year 2023. Today's Saturday. It's sunny outside. There is a shade because the sun shines in a direction that creates a shade on Main Street, right in front of CenturyLink building. I have been studying the market for about a year and a half intensively, almost 2 years. And I thought to myself, why is it that I am unable to be a consistently profitable day trader? I thought. And after having removed the veil over my eyes, I began to see the data. And the data was showing me that on certain situations, I would be suffering a catastrophic loss. It reminded me of something today, which is a long time ago, I had a friend, and he was visiting his brother in Southern California, and we lived in Boise, Idaho, and he had this Explorer, not an Explorer, Toyota. I wonder what it's called, but it's an SUV, Toyota SUV. It's not a Land Cruiser, but it's a smaller version. So I tagged along, and we stopped at Winnemucca, Nevada. And I wonder if it was on the way there or coming back. And so I was sitting at a table, and I was sitting in a position, and there were a couple other people who were either straddling us on the other, and he was on the left side of me. And for some reason, I was just sitting there, and my mind was in autopilot. Really, essentially, I wasn't sure what I was thinking about at that point, but apparently, his seat was actually in a losing streak, and mine was in a winning streak. So after a while, he says, "Hey, let's switch seats." And so we switched seats, and my luck turned sour, and his luck turned sweet. And so he started winning, and I started losing. And so when I look at that, I relate that everything to the market conditions now. The market has a trend, and that trend, whether I'm there or not, is irrelevant, because whatever happens for that position happens because the market defines what will happen for those two positions, and whether I sat here or there is irrelevant to the outcome of how the trading how the cards are dealt. Now, in Friday is a prime example. Friday is a prime example of the tilt that occurs whenever something that has statistical probability that's involved in the outcome of a particular trade. And if there's an outlying motivation for that particular seat or that particular trend to continue in that direction, it's going to keep going in that direction. And therefore, what happens is that there is this innate personal drive to prove that I'm right. There's an internal drive, regardless of what the market is doing. There is a innate fallacy in my thinking that causes me to keep thinking that way to make it right. There is a mental need to say that I'm right. I am right. I have to do that. I have to prove that I'm right, even though the market is completely reversed. I have to prove it. So that is the mental mental thing that I need to be constantly aware of. And therefore, when I'm in the market and I have a capital that has fresh and that has not been used to cycle through, especially in an account that's pre PDT. Now what happens is now what happens is when that happens, and when the account on a first or two trades goes sour, I have this uh, innate need to trade more in order to get a positive return out of that situation. And what happens is it's essentially digging around myself. It's like taking a shovel and digging around myself so that I get deeper and deeper into a situation. At the end of the day, after the fog has lifted, I see that the account has been uh, devastated. That is the outcome of numerous trades that I performed last year. Now this year will be different, and there are a few things that I'll be working on, which is essentially looking at the fundamentals are very valuable as well, because the fundamentals, based on what based on what analysts say, the stocks will move in that direction. Essentially, that's what it is, because the analysts have analyzed it based on the fundamentals. And based on the fundamentals, the analysts have stated that there's an accumulation or selling condition or neutral situation, and they define it. But only when the earnings come out can the refutation occur. And so there is a fundamental information that is uh, inherent in the price of the stock. And only when the quarter ends and the earnings are displayed, then things could readjust to the expected value. And then also the analysts can take that information and readjust their thinking about that stock. And then they'll reissue. So it's an ongoing cycle to redefine what the price of the stock should be. That happens. And the fundamentals allows me to understand how the stocks will behave. That has an additional information. Now, what chart pattern provides is a concrete information, regardless of what subjective information is in the public eye. The price reflects the nature of its the price added with the fundamentals, underlying fundamentals, and what will happen in the future. Because usually stocks are 6 months ahead of what the expected value is, and so that is priced in. That is why there is a thing called when the earnings are disclosed, um, there is a guidance. There is a guidance that's provided. Earning could be spectacular at this moment. However, when the guidance comes in and says, well, this year was the best, and then the guidance will say the next year, because of this, it will fall 50%. Which means that even though the current stock quarter was the greatest ever, however, the next quarter is guided lower. Essentially, the latter part defines the price of the stock. So the chart patterns defines how the stocks will behave. As a day trader, I look at the perspective of the chart formations that tells me this is the entry point based on the analysis that I perform. This is the entry point. And when I enter in this point, there will be a thesis that tells me it's going to be on a put side or a call side or a put side. After I enter, then I know based on my thinking, there's a trade management that says I have to set the stop loss at this level, and I cannot deviate from that level, because I know that once it passes through there, then it's going to essentially create another situation of 90 losses that I've seen last year. To avoid that, I need to exit as soon as possible because my thesis is incorrect. Now, when my thesis is correct, then the stock will start to move based on the chart patterns. And chart patterns have a unique, proven characteristics that are clearly defined that is used by majority of individuals who are traders. And those people who don't know, who don't respect those chart patterns, are the ones who are the 95% who lose in the market. And those individuals who have elevated themselves to such a fine level of understanding in moving averages, stochastics, and VWAPs, and chart patterns, then those are the individuals who are able to, on a consistent basis, take money out of the market. So chart patterns allows me to continue into day trading is understanding that when a chart formation occurs for me to enter, then that has a statistical probability based on the chart formation that tells me whether my thesis is correct or not. The fact is, because I've seen so many chart formations that tells me that's the entry point, the probability of my thesis being correct is higher than being incorrect. However, once the trade is entered and the movement occurs, there is a point where a reversal will occur, because anytime a particular situation occurs, such as if I enter with a call, that means most likely it was oversold. Oversold meaning that it has depreciated below the fundamental value of that stock, at which point what I'm attempting to do is ride the stock up to the point where it gets to close enough to a point where it's overbought. When an overbought situation occurs, that overbought situation causes the stock to depreciate. And when that depreciation occurs, that means that my call position will start to chip away at its gains. And at that time, that it tells me based on chart formations, and there are particular situations where it'll take a breather, but that breather is a different signature from the true reversal that occurs within that stock. And so I have to distinguish between when a trend is holding for a greater move, or it is essentially truly in a position to be reversing and reverse direction, at which time that I need to exit the trade. So these are things that I need to be practicing based on the chart patterns and chart patterns. So what I need to do, and what I will do right now, is to take each individual chart formations and become an expert. And I will study them as much as possible and post it on YouTube so that I have an idea of what to look for. What is the reason to buy and what is the reason to sell? And this is the roadmap that I've chosen, and I will go ahead and move in that direction.